gentlemen, welcome to the main event.
Let's go.
Round one. Fight.
Thank you for tuning in to the Crypto Street Podcast. Here are your hosts, Killer Whale, Prince, and Crypto Dale.
And remember to tip your waitress.
Yo, what's up, everyone? Thanks for tuning in to Crypto Street Podcast. My name is Crypto Dale. We're about 25 episodes in, 26, whatever the number is. I'd lost count, but want to just say from all three of us, thank you very much for tuning in. We feel it's been successful especially with our guests that have been on. We've had some awesome guests. Today's guest is even one of the best, and I'm going to do a little disclaimer here at the beginning that at times when our guest is talking, I'm probably going to be super lost because the piece we're covering, he's the expert in, and I am by far not. But we'll get to him in 1 second. Pierre or Killer, what's good, my man?
Yo, what's up, everybody? How you guys doing?
Doing pretty well. I went to, remember I told you that yesterday when we were talking, I went to an escape room last night.
Oh, how was that?
And yes, they do have those in lowly Iowa, guys listening, but got out with 8 minutes to spare, so we avoided getting kidnapped, essentially. Prince, what's good up in Canada?
Lots of snow. Roads are crap. It's just Canada right now. Good old Canadian winter. So we had some nice weather there for about 5 days, and that's gone now.
We could probably tune out and have like a music being like, do.
Yeah. Like,
Prince's weather up.
Yeah, a Canadian weather segment.
That's what everyone's always like. That's one of my favorite parts is when Prince, you guys always say, Prince, what's the weather doing?
Even though it's like
there?
-10 and snowing every single time, too.
Yeah,
it
doesn't really change much.
Yeah.
Like in the summer, we'd be like, how's the weather up there? Well, it's 20 degrees above or 0 Fahrenheit. So today's guest is a software engineer. We kind of wanted to get someone with a programming background on here at some point. So Pierre Rochard is our guest today. Very pumped about this episode, even though, like I said at the beginning, there's going to be times where I'm going to just probably be over here typing Google, okay, what does this mean and what's that mean? So welcome, Pierre. Hopefully we can ask you some very intelligent questions and get some key insight from you.
All right, thanks, Dale. I'll do my best.
So let's start out with just a background on how you got into cryptocurrency, Bitcoin, what it was that sparked some interest from you, maybe how long you've been in the game.
Yeah, so it's probably cliche at this point, but I got into crypto because I was a libertarian and I was running in libertarian circles in Austin. I was going to UT Austin and I joined up with a organization called Libertarian Longhorns. And that's where I met Daniel Krawiss and Michael Goldstein, who goes by Bitstein on Twitter and in real life, actually. And basically, we were primarily interested in economics. And so among libertarians, there's a big strain of economics called Austrian School of Economics. And we started a thing called the Mises Circle, where we would read certain Austrian economics literature and then get together and discuss it. And one of the big debates in Austrian economics is between fractional reserve banking and what's called 100% reserve banking. So we were going back and forth on this, debating it, and the topic of Bitcoin came up because Bitcoin is essentially 100% reserve banking. If you look at Bitcoin itself, obviously, if you look at Mt. Gox, it's fractional reserve banking. But anyway, that's when I first really started researching Bitcoin and realized how well it aligned with my economic views of what sound money is, and also my politics of having a private money rather than a government-issued money. So that was like December 2012, and went on to not Bitstamp. I forget what it was called at the time. It was Charlie Shrem's Bitinstant. They need to come up with better names for these services. It's
Totally.
Yeah, definitely.
Bitinstant. And I recently searched my inbox to see those old emails back from 2013. And yeah, sure enough, I bought in January 2013 a very small amount because I was a broke college student, but Anyway, yeah, that's why I'm not crypto rich. Anyway, it was still pretty early. It was before like the bubble up to $270 in 2013, and obviously before the $1,200 bubble. But I started writing about it because I was principally interested about it from like an intellectual point of view. I wasn't like in it as a get rich quick type thing, but obviously I saw the upside potential. So I wrote "End the Fed, Hoard Bitcoins," and that was like in February 2013, and just kept writing as ideas came to mind. I think the last thing I wrote was in 2014, but I've been having things come to mind, so maybe I'll get back to writing at some point soon.
Writing is a good way of just like it's like it helps you understand your own thoughts, sort of, right?
Yeah, for sure. It kind of formalizes instincts that you might have as you're trolling on Twitter, arguing with people. Then you can develop that into a Medium post. But I do want to add that when I was in college, I was getting my bachelor's and master's in accounting. So it was already just the money aspect of it was interesting to me, and the accounting aspect of it. And then after I graduated and I wanted to do things with Bitcoin, and I realized there's no like Bitcoin accounting software. And if I wanted to build it, I'd have to learn how to program. So that's when I started learning how to program, and really haven't stopped since. And my career went from being a straight up accountant to being a straight up software engineer over the past 4 or 5 years.
So you really did, like, I think you really dove headfirst into this programming thing, because I take a look at your website, I take a look at your Twitter profile and your posts, and it's clear that you, from what I can tell, which is nothing really, but it seems like you really know what you're talking about. And this is like Dale reference. This is going to be an episode where I say probably a lot of really stupid things, but I don't know they're stupid. So I'm just going to put stuff out there, and hopefully I'll learn a lot, and having you correct me, and we'll kind of, because I have zero programming experience. So I'm kind of curious, with that background in mind, what are some of the biggest misconceptions that you see within the blockchain space, within cryptocurrencies, from like a programming perspective? Do you see any like inconsistencies that you notice very often with people or anything like that?
That's a really interesting question. I think that people give simultaneously too much power to the Bitcoin Core developers, in the sense that they project Bitcoin Core having power onto these developers, when really it's a much more nuanced relationship between the Bitcoin Core contributors and the Bitcoin consensus than like the developers determining what the consensus is. Because the developers are actually very keen on understanding what the consensus is and then including that in the code, rather than the reverse. And the other thing is that they, simultaneously to that, they also give too little credit to the Bitcoin Core contributors, in the sense that people think that, developers are a fungible commodity. They're just code monkeys, and they just do whatever we tell them to do. And we saw with SegWit2x that that's not really the case, because if you take someone who, even if they're very experienced, which allegedly Jeff Garzik is, they can still turn out some crap code. And the reason is that, and this is an important point to understand, programming cannot be done in a vacuum. It has to be done as part of an overall software development process. And so if you have just one autistic person in their bedroom programming, the results are generally not going to be pretty. You want to have a team around it. You want to have a kind of a managerial, there's people whose job is to make sure that code has tests for it. Code is tested both manually and automatically. And then the code architecture is appropriate, and the code quality is up to snuff. And all of this is part of a review process where someone says, okay, here's the code I'd like to include in the GitHub repository. So they do a pull request. And then ideally you have like a dozen other people read through it and nitpick the shit out of it. and point out like, hey, you can do this better. You can do that better. Did you think of this or that? Because as one software developer, there's just no way you're going to be able to think of every edge case, every little nuance in the code, and every possibility. And so you have to have a team around you of highly competent individuals who not only know what they're doing, but are also very motivated to review your code and make sure that it is correct. And so that's not something that you can just go onto a freelancing website and get some, pay some people $20 an hour from Bangalore to do for you, because they just don't have the expertise and they don't have the motivation to carefully comb through your code. Those are the two things I would bring up.
Love it. So I just want to touch, because you kind of mentioned about the whole SegWit 2x situation, and now you have a tweet, your pinned tweet, and you mentioned how, you got to understand that whole situation from back in November to kind of really, get this ecosystem. And you referenced an article. Now, maybe touch on that, because I think there's a lot of new people in the space who don't even know what happened in November.
Yeah, sure. So there's been a long-running conflict in Bitcoin about scaling, and I use that word loosely because I think that it actually gets misused. To me, scaling, it means that you can increase capacity and throughput by making architectural changes. And scaling is not just adding another server. And so in the context of Bitcoin, just increasing the block size limit, to me, is not really scaling. You have to improve the performance profile of the code so for example, in computer science, they have this concept of like O1, which means that if you increase the demand on the system, then it will take you a linear increase in resource, or actually no increase in resources for O1. And then ON is a linear increase of resources needed to meet the demand. And then ON squared means that you need exponentially more resources to meet the demand. And so to me, scaling is changing the system from ON squared to ON, or from ON to O1. And increasing the block size limit does not change what's called the big O notation at all. And so to me, that's not really scaling per se. That's just kind of a kludgy way of increasing the capacity. I would argue that the Lightning Network is an excellent example of changing the big O notation. But we can hit on that later. I just wanted to point out that, there's a scaling debate, quote unquote. And so there's kind of what's called the big block camp of people who want to just increase the block size limit, and that way we don't get transactions backed up in the mempool. We don't have fees going up. We don't have a delay in payments, which is degrading the user experience for people who are using services like BitPay or Coinbase, and who kind of expect their Bitcoin payments to go through, within the next 10 minutes.
Pierre, one thing I struggled with when I first got into this space was I kind of got really involved during the height of this Bitcoin scaling debate. And in my mind, like block size increases, that was an easy thing for me with no programming experience at all to understand. Bigger blocks, more information per block, faster transactions. Like that's an easy thing for me to kind of digest. But SegWit and like all the sort of other changes and enhancements in transactional speed, those are really tough things for me to comprehend. So I think, the bigger blocks camp has like an advantage just because their like kind of preferred method is just easier for regular people to understand. But that doesn't necessarily mean it's the best solution. And there are things that like about SegWit and like bigger blocks that like I don't know about. Like the vast majority of people do not know about the pluses and minuses. So maybe dive a little bit into that, and if that leads into Lightning, perfect. Because you know a hell of a lot more about that than we do, I think so.
Yeah, I do want to finish my story about SegWit 2x, but I can address that because I think that in terms of the argument for big blocks, or my argument against it essentially is that generally speaking, we do want a transaction backlog. We want to have a mempool, and we want to have fees so that we can dissuade abuse of this blockchain. And it's abuse because the nodes that are a key part of making sure that this system is trustless and decentralized are not compensated for having to store all of this data and all of the associated bandwidth with it. And so we have kind of a tragedy of the commons type situation where if there's no cost attached to putting data on the blockchain, then people will abuse it and use it for reasons other than sending financial transactions. And so I think that it's an important, essentially anti-spam measure. So I think spam leads to centralization. We kind of saw that with email, where Gmail became really popular because it was the best at preventing spam. And similarly in Bitcoin, if we allowed the block size limit to just continue increasing, and some people have said, let's just remove the block size limit altogether. And so there would never be any fee pressure, and you would just have all of this data going into the blockchain, and you would end up in a situation where the nodes are essentially all centralized in data centers, either with the miners or, you might have a little more decentralization than that. But the reason that's bad is because the network of nodes, the peer-to-peer network of nodes, which is Bitcoin, determine the consensus. And if the network of nodes is centralized, then a state actor or a nefarious person could conceivably hijack those nodes or somehow acquire them, get their hands on them, and change the consensus. And the rest of the Bitcoin users would be unable to resist this hijacking. And the perp would be able to do anything, right? Change the monetary policy, censor transactions, and otherwise, make Bitcoin valueless and just completely pointless. So I'm kind of presenting this as an extreme, right? Because the counter argument is like, okay, well, SegWit 2x is not like gigabyte blocks, right? So it's just doubling the block size limit. Like 2 megabytes isn't that big a deal. And I tend to agree with the caveat that we want to start having a fee market and have the mempool filled sooner so that users, wallets, services can start adapting today and start effectively using the what block size amount we currently have. And so that's kind of why everyone's been screaming at Coinbase and whatnot to use SegWit and to use transaction batching so that people are more judicious about their use of the blockchain today. But so to me, any capacity, any increase should be like, let's add 50 kilobytes at the margin every 3 months. Not let's double it and then like just completely crush the fee market by putting way too much supply on the market. And so the reason that I really found SegWit 2x to be completely objectionable was the people who were pushing it and the way they were pushing it. And so to me in Bitcoin, since this is a decentralized project and you do have to persuade the node operators, that is, the people who have nodes that they are receiving and sending payments or verifying that they are receiving and sending payments with, those are the people in control of Bitcoin. And there are thousands of them, arguably tens of thousands of them. And they're the people that you need to speak with if you want to start making consensus changes, because you need to persuade them that they need to upgrade their nodes to your software. And the SegWit 2x proponents did no such thing. What they did is that they went to the miners and they got 90% of the SHA-256 hash rate to sign on to an agreement that they would upgrade their node and thus deprive the quote-unquote old consensus of any hash rate and cause the creation of blocks to grind to a halt so that everyone switched to the new consensus. So it was very much a hostile, let's starve the old chain of hash rate and force people onto the new consensus, rather than a voluntary, hey, let's persuade people that the new consensus is inherently better, and so that everyone upgrades their node software. And so that I found that to be enraging and appalling and just completely objectionable. So that's why I came out strongly against Segwit2x. And that's why I posted that to my Twitter account, because Ariel DeChapelle put together a fantastic article at CoinDesk, laying out what I just explained and making it very clear to everyone that Bitcoin is controlled by the users. It is controlled by the users acting through their node software that fundamentally determines what the consensus is of this peer-to-peer network. And the consensus hires the miners to mine the consensus. The miners are not some kind of democracy or power brokers. They are our contractors, and they work at our leisure.
It's a good way to put it. And I think things have gotten so backwards now because miners do, it's like a cartel. They run the show, or at least they try to. So that was a really good way to put it.
Yeah, Pierre, I have a question. So you hear a lot about Lightning Network. I think especially in the past month and a half, I've noticed the news stories have picked up. I see it on Coinbase or CoinDesk all the time. Can you give kind of a rundown of what Lightning Network is in layman's terms, what it aims to solve, how it works a little bit? Because I think for a lot of people, they go, Lightning, I mean, what is this? What does it mean? What does it do?
Yeah. So it's important to, when we're thinking about Bitcoin, it's important to distinguish between lowercase Bitcoin, which is kind of the token, right? The money, the 21 million Bitcoins, and the Bitcoin network, which is the payment network that we use to send these tokens around. And it's unfortunate that we use the same word to refer to both, and so it can be wildly confusing for people. In fact, I think that it has led to people making completely flawed analytical mistakes, and I think that it led to the creation of Bitcoin Cash, but that's a different story. And so Lightning can best be thought of as a new payment network that is built on top of the Bitcoin payment network, and that utilizes the properties of the Bitcoin payment network to bootstrap a network that has different properties, and properties that perhaps would be advantageous even if you don't have a block size limit and you can have as many transactions on chain as possible. I would argue that Lightning still has significant advantages. So if in layman's terms, there's two huge advantages for Lightning. One is that it's instant. And so once you broadcast your transaction to Lightning Network, then it's done, right? The money is sent or received, which is not the case with Bitcoin. With Bitcoin, with the Bitcoin payment network, let me be clear, because in Lightning, we're still using Bitcoin the money, right? Mm-hmm. And so in Bitcoin the payment network, when you send Bitcoins, you've got to wait until the next block. And on average, that's going to be 10 minutes. But due to the fact that that's just an average and statistics have a bell curve, it could be significantly longer. It could be like an hour, right, before the next block is found. Or it could be 10 seconds. So it's highly variable. And on top of that, if you're sending a significant amount of money, you're going to want to wait for more than one confirmation just to make sure that there isn't like a reorg or something funky happens. So, people generally advise wait for 6 confirmations is kind of the standard. So it's Lightning is instant. The second point is that Lightning has a much lower cost attached to it. And the reason is that earlier I was mentioning that we don't want people trashing the blockchain with their bullshit transactions. And the reason is that the blockchain every node stores the entire state, the entire history of Bitcoin, the payment network. And so all of that data gets stored, and all of that data gets broadcasted to the entire network. With Lightning, you're broadcasting that data through channels to other specific nodes. And so it's not a global state, it's more of a local state. And that means that you don't have to worry as much about the spam, because you don't need to, you also don't need to store the historical back and forth. You only need to store the latest transaction. And so in that regard, there's less resource utilization. You can have a Lightning node running on your cell phone. And that means that you can have much lower fees, because now we don't need to worry about punishing spammers. And so Lightning, instant and much lower fees than you would need on the Bitcoin payment network, while you also have the advantages of the Bitcoin payment network of being 100% reserve. So it's not an IOU, unlike what you'll hear from certain angles. It's not an IOU. All the money's there. And it's also peer-to-peer, and it uses the same kind of, let's call them like cryptographic principles, so that you can avoid fraud, and you have transactions that are irreversible. And so it does maintain the properties of Bitcoin in that regard, of the Bitcoin payment network.
Are there any downsides to Lightning Network? Because there's kind of like a theory in finance where there's no free lunch. With extra risk comes extra reward, and extra reward comes extra risk, yada, yada, kind of period. But like that's a true kind of tenet of investing. Is there anything like that with Lightning where, it has all these benefits, quicker transactions, cheaper transactions, but much like bigger blocks, maybe there's some kind of downside to that?
Yeah, so I think that the biggest downside is that your node has to always be online. Because basically you have to be checking to see if the person that you're transacting with takes an old transaction and broadcasts it to the Bitcoin payment network. And if they do that, you need to immediately essentially also broadcast a transaction that revokes that one and punishes them by taking all of the money in the channel. So you do need to have your node on all the time, and that can be a significant disadvantage. So I think that the concern there is that will mean that people will rely on centralized services that maintain 100% uptime and like guarantee that, oh, look, if you use our service, then our node is always online and we'll be able to secure your Lightning transactions for you. And so that's a risk. And already in Bitcoin, we saw that with how many people store their Bitcoins on Coinbase, right? And so arguably Lightning could make that worse. Lightning is, they're deliberately preventing people from sending large amounts of money through Lightning channels. So I think that the other downside is how new Lightning is. And so even when it gets released to mainnet officially and people are using it in production, it's still less proven than the Bitcoin payment network. And so I think that it'll take a few years for people to gain confidence in it and for it to continue to grow. And the other thing, though, is also that the big disadvantage of Lightning is that it is so different than the Bitcoin payment network. When you compare it to, for example, scaling by doing what Bitcoin Cash did and increasing the block size limit, that allowed service providers to essentially continue doing what they were doing without changing their code. With Lightning, people have to either create new service providers or they have to retrofit and like change their platform, change their business model, and their customers have to get new wallets, right? We got to develop Lightning wallets and all this. And so Lightning in a way is like backwards incompatible with Bitcoin, and it causes a lot of disruption in the industry when we were already having trouble with adoption and like getting merchants to accept it and whatnot. Here we are like being like, hey, forget about the Bitcoin payment network. Everyone get on the Lightning payment network. And so you can see how that would frustrate people who have put a lot of work into creating and promoting Bitcoin payment network services.
Pierre, I want you to touch on, so you're a self-proclaimed Bitcoin maximalist. We talk about all different sorts of altcoins on this show all the time. We have sort of an investing, trading skew. Explain a little bit about why that is, maybe what a Bitcoin maximalist is for people who don't know. And just kind of explain why you feel that way, some of the arguments for and against and all that sort of good stuff.
Yeah. Okay, that's fair. So I was a Bitcoin maximalist before the word Bitcoin maximalist existed. I remember
Did you coin that word?
No, not at all. Our enemies did.
We can say you did.
Yeah, of course. Of course, I know they did.
And we appropriated it, much like the N word. But I'll get in trouble for that one. I remember a month after I got into Bitcoin, and then I started reading about Litecoin, and I was like, this is retarded, because the silver to Bitcoin argument is inane. The whole reason silver was a thing is that a piece of gold was too valuable and you couldn't subdivide it more. But Bitcoin goes to Satoshis. So Satoshis are the silver to Bitcoin's gold, not a different money.
It's just one of those phrases that you always hear thrown around. Everyone's like, yeah, that sounds good. Gold, Bitcoin, silver, Litecoin. It makes sense. But nobody actually thinks about it. It's just thrown around.
Yeah. So I was, already throwing shade on Litecoin a month or two into my adventures in crypto land. And then we started seeing, people promoting things like colored coins and app coins and all of these and they would also talk about we need non-monetary uses for blockchain technology. And everyone's focused on the money, but that's kind of just libertarian gold bug bullshit. So we need to focus on creating other services other than just payments and money. And I just found that to be insane and completely off the mark. And so when Ethereum was being developed, I forget who it was. I need to give him credit for this, but he wrote a Medium post that had the spectrum of people, from people who are oh, everything should be built on Bitcoin with side chains, drive chains, all this stuff, colored coins on Bitcoin, all of that. So they are the Bitcoin maximalists. And then on the other end of the spectrum, there's the multi-coiners who are oh, every application should have its specialized token that we use, and will, the free market will price all of this correctly and all this stuff. And so I found that to be a straw man, because I rejected even having colored coins on Bitcoin. I think that's stupid. I think that my maximalism isn't that everything should be built on Bitcoin. And my maximalism isn't that so basically, let me get into what it is. It's that the only application that matters and that will really change the world is that of money. And B, I think that the market for money is a winner take most / all market. And so the best case scenario for altcoins is essentially a Pareto ratio, where it's 80% Bitcoin, 20% some mix of altcoins. And that's my maximalist theory in a nutshell. And we can get into some of that as well. But and so I used to say that I'm a maximalist and a minimalist. It's I'm a maximalist in Bitcoin only, but I'm a minimalist in the sense of only money, not interested in issuing unregistered securities on the blockchain.
Well, do you think things like smart contracts and all these services that those sort of entail, or that the services that the people who support those say they will entail, is that just something we're not ready for yet, in your opinion? Is there a reason you don't think that kind of stuff is maybe the core tenet of this stuff? Or kind of dive a little bit into that.
Yeah, so I think that we would want to kind of create a taxonomy of smart contracts because that encompasses a lot of different ideas. On one extreme is smart contracts that are essentially features for a payment network. So, for example, like if you have multi-sig, right? That's arguably a smart contract, and so I think that's fine. It's like there's checks where you need to have multiple signers. It's like a common thing in payment networks, sure. And it's cool that it's cryptographically enforced. And then there's a time lock, right, where you send Bitcoins to this address, but you can't get them out until 10 years from now. And that's really neat as well. And so those are kind of features of the payment network. On the other end of the extreme is smart contracts that essentially represent is like the equity or debt security for a business. And that they're like what people will try to say is that, oh, well, this is a decentralized business. And so like this makes sense to have it on the blockchain. But the reality is that you actually, I've never seen a plausible case for a decentralized business. A business will always need some kind of, what in law they call nexus. So like, where does this business intersect with the real world where people are buying goods or services? And I don't care if it's happening in a data center in Virginia or if it's happening in a store, and so like, for example, with the DAO, which was like the whole Ethereum thing a couple years ago now, they raised money for what was essentially a partnership agreement, right? And then the partners would vote on what to fund. So to me, like that's great and all, but why not do that with the current legal system? Like put together a partnership agreement and then have people vote on what they want to put the funds towards.
Yeah. It goes back to what we're saying, like there's no free lunch. Like decentralization is great for a lot of reasons, but there are some benefits to centralization. It's in general more efficient because, you're kind of combining, everything's more centrally located, which again has downsides, but it's more efficient. So it's always a balance of these two things. And you see it with a lot of, I think, decentralized exchanges right now where they're really cool because it's like you don't have to register. You don't even need your name. You can just trade tokens and it's a free market economy. But they're less liquid. You're less likely to get the price you want to get as of now. And I think that'll change going forward. But I mean, one thing I see with Bitcoin maximalism, to kind of go back to that a little bit, is I kind of find myself becoming more of a Bitcoin maximalist over time. But one of the problems I do find with it is I think a lot of the times people think that Bitcoin instantiating smart contracts and those technologies will be easy. And they kind of act like it's just going to be this flip that you switch and all of a sudden Bitcoin will have smart contracts and that'll be the end of Ethereum. Why would you ever use Ethereum? And the thing that I want to say to that is building smart contracts, it can be hard, and that's why Ethereum has a lot of these security flaws, in my opinion, is because this is really tough stuff to do in a good way, consistently, securely. And so I think Bitcoin's going to run into a lot of the same things when they start to implement these sorts of smart contract things. Pierre, what would you say to that?
Yeah, I completely agree, and I'm actually I'm opposed to things like rootstock, and I know that's probably going to get me in trouble as well. But and with the DAO, we saw this. The fact is that due to a flaw in the partnership agreement that they put together, they had to hard fork their blockchain. And I never want Bitcoin to have to hard fork to accommodate something that is completely unrelated to the money or the payment network. Like, I would find that to be reprehensible. And you're creating a huge negative externality by attaching a lot of value to an immutable blockchain when that contract should be mutable, right? And you should have the ability to change that contract in a and that's why we have a legal system, and we have commercial law, and we have Delaware corporations and all of this, and like that's why contracts even have things, like penalties and whatnot. Like you should be able to break a contract. And so people who are like, oh, like code is law, you should never be able to break a contract. Like that's an absurd statement. So
never.
Yeah. That's not how real life works. And I wonder how many of these people have any real life business experience. It seems like they're completely disconnected from reality. So I'm opposed to having smart contracts that are too smart on Bitcoin. And on the other hand, I think that so I hope that it is hard to do, and I hope that it never takes off.
Well, Pierre, I don't know. Do you have anything else you want to add? I think we're about at our normal time limit here. Or not time limit, but I got out of questions. And
yeah, we touched on everything I wanted to touch on. That was a lot of good information, man. I'm still trying to, this is going to be one of those episodes I have to listen to myself like 3 or 4 times to get maybe 50%, just because a lot of it's like above what I can process in terms of programming and stuff like that. But it's super appreciative to have you on. This is really a big reason why I wanted you on, because I think it's an area that I don't know about. So I need people who do know about it to teach me about it. So I would just say thank you. Appreciate the insight. Learned a hell of a lot today.
Awesome. Thanks for having me on.
Hey, Pierre, on one question real quick. If someone out there is maybe wanting to get into programming or software engineer like you, what would you recommend? Where would they start?
Yeah, so I started out on this website called Codecademy. And so if you go to codecademy.com, they've got a number of different tutorials. All the intro ones are free, so like don't feel like you have to hand over money. I never paid for it. But after I did the intro, then I actually kind of just started working on what I wanted to be working on. And so you have to have a problem in mind that you're trying to solve. And that otherwise you can't just go in and like start rote memorizing how to do things in programming. You'll quickly lose your motivation and interest in it. So I think that a good place for your audience to start if they want to get into programming, go to Codecademy. Like learn the basics, pick a language. I picked Python, but you can pick JavaScript. That's another very popular option. And then a good thing to do is try to write a trading bot. And so all of these exchanges have an API that you can program against. And that'll be a really good way for you to stay motivated and keep learning and go deeper and deeper, because writing a real-time trading bot is it's going to touch on a lot of different aspects of programming. And then the second thing is also create your own personal website from scratch, and that'll teach you about web development, HTML, CSS, and how a web server works, and how to set up like your own domain name and all of that. So I think those are the 2 things: create a trading bot, create your own personal website. And if you tackle those 2 things, then you can start thinking about what are other opportunities you want to put your programming chops to.
Perfect.
Beauty.
I think those are pretty good places for everyone to start if you're interested.
Absolutely.
So thank you, Pierre, very much. I echo what Killer said. Really good stuff. I'm going to have to listen to it probably every morning on my way to work, and probably every night this week home. But I think I'll get it. I kind of understood what you're saying, but get a better grasp on everything. So any parting words, fellas?
No, just
it was
thank you
awesome.
again.
Yeah, that was wicked. Thank you so much.
All right. Thanks, guys. Let's do it again.
Yeah, of course.
Yeah, you bet. Thanks for joining, Pierre. Everyone out there, tip your damn waitress. Take care. Peace out. We'll talk soon.